current conclusion of what all the people involved in that asset think right now. That all comes together at price. So that's everybody's thinking. So you have to be able to think better than everybody combined over time in order to win that game. So it didn't work for me. Maybe it'll work for you. And again, it's a dangerous thing because once in a while you will get it right. You will have a winning trade. So all of a sudden you'll convince yourself you are the smartest fucking person out there, right?
Yeah.
And that becomes a very, very dangerous place to be. What is the discounting mechanism in the market, right? We know that the market is a discounting mechanism. What is the mechanism? Is it price? Some would argue that it's price. I would argue that it's positioning, right? When is something over discounted? When something has doubled in price? Now the good news is over discounting? Well, I don't think so. People tried to do that with NVIDIA this year. The thing doubled, they all tried to short it. It doubled again, they all tried to short it. It doubled again, right? That's believing that price is the discounting mechanism. I believe positioning is the discounting mechanism. So when it's over positioned, that's when the risk has changed, not the price, but the positioning.
Welcome back to the Unpacking the Markets podcast. Now, before we kick off, can I please ask you to subscribe to this channel so that we can continue to grow and help traders worldwide? Let's get into it. What's the most important skill that a trader needs to develop to make money over time in the markets?
I think probably a sense of, I think the most important skill, frankly, is to stop trying to be right. Stop trying to outthink the market, because that's not going to really work over time. You have to develop some sort of process where you find there's an edge, and you have to be nice and disciplined and stick to that process, and over time let it work for you. I think that's the most important thing of what trading is. I think that is what trading is. People like to think it's about, hey, I know what the S&Ps are going to do this week or today or whatever, and I am not a believer that that over time that is going to lead to profitable trading, because trying to predict the future is an exercise in futility. But if you can develop a process that captures some edge in the market and then have, like I say, the discipline to stick to that process, which is probably even harder than actually developing the process, then you can have a shot.
And what stage did you learn that?
10 years in.
Okay. Yeah, because you had some. Yeah, I mean, you had some early success after you left HSBC, right? I read you ran an account up 7x, so I guess at that point where you
that's not like, at the time I thought it was because I was a genius, but I have came to learn pretty quickly that was not the case. I was just a kid who was riding a bull market and doing it in a leveraged way, and so I ran the account up however many times, but it didn't mean anything in the end, because I just, with the same attitude and same thought process, I just gave that all back. So
were you predicting at that point, or were you trying to know?
Yeah, no, I was predicting. I thought I knew better. I thought I knew better than the market, which is a very typical thing for a new trader to do. In particular, when all of a sudden you have early success doing that, then you figure, hey, man, I can't go wrong, But the market will humble you and will teach you that lesson, I promise you.
So when, after you ran the account up, or you kind of had that success, what happened? Did the bull market ended, and then
bull market ended?
Yeah.
And then I learned how to make money in a bear market. Oh, you go short. Well, that's fun too. And then that worked for a while, but then the bear market ended. Over time, you eventually learn that trying to predict these things over time is not going to really lead anywhere except to pain. So you have to kind of make a decision what you really want to do, which is what I did. And I went back and I really did a lot of work, and I really did a lot of studying, and I came up with a process that I believed worked. And that's what I've been using really ever since.
Yeah. Yeah, it brings me to another quote nicely there that you have that made me laugh out loud. Uh, it uh, it was, I'm convinced that shorting the stock market is more addictive than shooting heroin. So obviously that belief was developed when post that bull market when you were trying to make money in a bear market, was it?
Yeah,
Right.
that was part of it. Yeah.
Why is it so addictive to short the stock market?
You know what? To tell you the truth, I think it probably, I'm no chemist or whatever you would call it, biologist, but I think it probably produces the same type of effect in your brain as something like shooting heroin does. Um, there's nothing like making money on the short side of the stock market because it's like the hero effect, right? Everybody for the most part is losing money and you're making money and you're like, gee, I'm a freaking hero. I'm a genius, right? But there's no
Mm.
feeling like that, I think. And so it becomes extremely addictive. And if you just think about the simple math that the stock market goes up 75% over time, um, 75% of the time over time, then you're addicted to something that is a loser over time. And that's not usually very good. And
Yeah.
it happened to me. Made first time I made money on the short side, and never forgot it and wanted to do it the rest of my life. Until I learned that it wasn't really working too well over time. So I stopped trying to do that. And again, got into developing a process. And it's not that I don't short the stock market once in a while. When my
Mm.
process says so, I do. But I don't make it a habit.
Yeah. I think I very much relate to it. I've never done heroin, but and I can relate to the addictiveness of shorting. So I also started with that, and to go to what you said at the start of this conversation, that need to be right or to be a hero. I definitely hugged that. Didn't want to let go of that initially, and all the way up to it was still in my trading little bits. I have to manage it with my own process. And then when I was researching you, I really kind of thought, well, actually, this is still in my process in ways. I had to, full disclosure, had to change my process while while I was researching you, and we get onto that too. But I definitely think it puts you on the wrong track because you think again, it's that attitude. I know something the market doesn't know. Everyone's long, I'm short, and therefore, I'm the hero. I'm the guy that's right here.
It's not just you or just me. It's, we're all human beings and we all fall victim to the same type of psychology, right?
Mm.
Um, so the issue is that I'd say a good 99% of us don't learn, me included, until we learn the hard way. So I can tell people this stuff all I want, but there's a good chance they're not going to listen. And they will listen when they learn the hard way for the most part, And I did that too. So it's not like I'm bragging on other people. This is what humans are. This is what we are. I
Mm.
feel like if we had all listened to our dad from the very beginning, we'd all probably be better off. But
Yeah.
we don't do that because we want to be independent and we want to do our own thing, and we want to learn our own lessons. So that's just the way it is, and learn the lessons you will, in this game. I can tell you that this is a very hard game,
Mm.
and there's not a lot of debate as to what ends up being making you successful or not. It's all P&L, and people will fight that as well. Oh, well, it's not me, it's the market, yada yada yada. And you can do that for a while, but when your account runs dry, then you either learn your lesson or you just stop trading because you've lost your money. It's a pretty honest and harsh game in that. So this is the cycle that I think everybody goes through. Everybody I've ever known has gone through it. So
Yeah. Yeah, I also am one of those people that went through it, and I had Simon Rhee on. I know you also had Simon Rhee on your Crowded Market Report podcast,
Mhm.
and he was my first mentor, actually, as in I bought his course way many years ago, as in like 3 years ago, right?
Mhm.
And I said to him, for someone like me that was a bit of a know-it-all, didn't want to listen, wanted to do things myself or whatever, learn my own way. What would you tell me, or someone like me, so that they could avoid losing their capital and having to start again? And he was like, there's some people that, you can tell them the stove is hot and you can tell them twice, but they're just going to touch the stove. And sometimes pain is the best medicine. So that was his view. And I tend to agree with him. If I could go back, I don't think I could have got through to myself either. But
How
yeah,
would you? You know what I mean? You're not going to believe it until it happens to you, right? I
yeah,
mean,
yeah,
I have a I have a web page where we are attempting to help people learn these lessons. The focus of my web page is not like, hey, Jason Shapiro, market guru, here he's telling you if the market's going up or down and all that, right? In fact, I'd say the opposite of that. My chances of knowing if the markets are going to go up or down are no better than anybody else's. But we focus on those type of lessons. And so I see it. We have a lot of people join and come through, and I see them going through the process. And what I usually tell people is, if you're looking for somebody to help you turn your whatever 10 grand into 10 million in the next 2 years, then you should go somewhere else. And when you learn that lesson, that's not going to work. And if you're still interested in trading, then maybe come to us and we can help you learn what really are the lessons you need to learn. It's not about how to read a chart. It's not about, all that crap, right? It's all kind of here, So the people that have had success, I think through our webpage, are the ones that have been through that already, right? We do have a lot of younger people come on there that are newer traders, and they tend to want to puff out their chest and say, hey, look, I'm buying this and I'm selling this and I'm doing this and I'm doing that, and that's okay. And I hope it works for them, but like I say, I've yet to see anybody that has just come out of the gate and done that and just continued their success the whole way through. I came out of the gate very hot because I happened to be in a bull market, but learned my lesson over time that wasn't the case. I am not, in fact, smarter than every single person in the market. And in fact, all the people in the market combined is what you really need to be smarter than if you're going to do it that way. And I don't know if that exists. I don't think it does. So, it's like you say, you got to burn your hand on the stove. Most people have to burn their hand on the stove,
Yeah.
Otherwise, how do you know? Let's say you did exactly what I told you to do. And let's say by some amazing coincidence, that ended up working for you. Well, how do you know that something else doesn't work for you better? Right? Until you burn your hand on the stove, right? So that's just the nature of humans. And with the market, because of this P&L thing, it's very measurable. But a lot of things, it's not necessarily measurable, right? People get very stubborn in their ways. They argue with you, whatever it be it politics or something. People in politics usually do not change their mind, no matter what the evidence tells them, because they can always make a story of why the evidence is not what you're telling them it is. It's what, the evidence is what they're saying it is, right? And you can do that in politics because who's to say, right? Where's the proof? Where's the proof? Whereas with this stuff, it's very harsh because the proof is right there in black and red. And when you're wrong, it's painful. You lose money. Losing money is a very painful thing,
Yeah. Yeah. And so in your community, you actually focus on kind of developing. It's not just you send out your report. You also bring traders in and help them kind of along their way and trying to call out some of the lessons they might be headed towards, or kind of warn them in advance of.
We try to talk about those, and everybody tries to, we try to have a good community of people that are honest and open about what they're doing. And we try to talk about that. And I try to talk about my stuff. I think one of the things I like about it is that, people see me like, oh, I was in some Market Wizards book and okay, I've had these good returns. That's great. But what they can see as I go through my report, I talk about it in my report as well. They can see, yes, I have my trades on there. And if people are looking to copy trade me, they can, although I very much discourage that for a number of reasons. But if that's what they want to do, they can. But what they can see is me going through it, me having losses, seeing how I deal with those losses, me having winners, seeing how I deal with those winners, me, despite having a pretty set in stone process, me still screwing that up and seeing how I deal with that, like all these mistakes that people make, and they can see that, hey, here's this guy's been doing this a long time and has had some success doing it. And I can see through his eyes the mistakes he's making, and I can learn those lessons from him as well, So that's really what I'm trying to do here. I'm trying to say, like, trying to teach people to fish rather than give them fish.
Yeah. Especially when all you want at the beginning is fish. When
What's
someone
that?
comes for us, it's difficult when all you want in the beginning is fish. People come to trading because they want money, and then
Right.
it's difficult because that's all they see. It's like not even the outcome, the output. It's like, that's what I want, and then you try and say, no, you have to kind of build your own process. It's hard, to get through to people.
It's hard, man. That's the one thing I would say. If anyone wants to ask me, what's it like trading? That'd be my first answer. It's hard.
Yeah.
It's probably the hardest thing that mentally you can do. There's clearly a lot of physical things that are harder than that. But mentally, it's probably the hardest thing you can do.
Yeah, because people do romanticize, say, or you kind of hear it on a day trader's advertisement, in a luxury house, that I trade for a living every day. But actually, it is. I imagine it's very taxing on you. Like, what's your routine like every day as you're actively managing money?
It's there ain't nothing romantic about it, I can tell you.
Right.
It's a lot of time doing this, a lot of time thinking about my own weaknesses and my own psychology and my own flaws and things I deal with every day. So yeah, it's not what people think it is. That's for damn sure. Which is also something that they will never understand until they actually get into it, and then they will realize that it's not what they think it is. And
Yeah.
I get it. I come from a place where I've been doing this a very long time. So sometimes it could be hard to relate to how people are thinking about it. But I can go back to, what I used to think before I knew anything about this. And it just seems like, oh yeah, I have a little extra money. I'll just get in the market and I'll put my money to work and I'll make it work for me and all that. And, it's just unfortunately not really how it ends up working.
Yeah. It sounds like it frustrates you, that outside opinion on how it is really, as in the real life stuff
It
is
doesn't
not
really
like
frustrate
that.
me. It is what it is. I was there too, it just kind of is what it is,
Yeah.
People have their belief systems, and like I keep saying, in time they will learn.
Yeah.
And that's the one thing
That's
about
not
this
avoidable.
game is you will learn in time. I promise you.
Yeah. Sounds like a threat there when you said that.
People have like asked me, hey, what's the best way for me to learn how to trade? I said, you really want to know? Take all your money, put it into a brokerage account, and start trading. And trust me, you'll learn. That's the best way I can explain it to you. You'll learn because you'll be motivated.
When you were discussing that day to day, you talk about reflecting on some of your weaknesses or things that you find difficult. Do you have to do a lot of reflection when you're in this job?
A lot of reflection. And like the newsletter that I do, for example, every week, is really just something that I have done for 25 years for myself, which is putting my thoughts down, about where the markets are, what my system is looking at, under what circumstances do I want to do trades, but also I put down a lot of my thoughts, of what's going on with me and my trading and my thought process and all that, so that I can go back and I can look and I can learn from that. I did this for myself for over 20 years.
Wow.
And that has now turned into what my newsletter is. But I think that's an important thing to do. Like I said, this game is so mental that it's very important to be in touch with your inner self, and when the conflicts that are going through your brain at any one time, and what's sort of hurting you and what's helping you.
Yeah, it takes a lot of self-awareness, actually, I think, to do that. Maybe you've developed a skill over 25 years, but it's not something that's talked about that much. People talk about trading psychology, but I think it can be a bit of a vague term these days. I mean, when it comes to really inspecting yourself, it's not an easy task, and it's definitely not advertised.
It's not. We have defense mechanisms that we build up over time that want to prevent us from being able to assess ourselves in an honest way. You know,
Mm.
so it's a difficult task. But you know what? Making money trading is a difficult task. So if you're not ready to tackle difficult tasks, then you're probably getting into the wrong arena.
Yeah. Yeah. Well, I think in doing my research for this podcast, I mentioned before I had to relook at my process, and I I had the borderline nervous breakdown when I went through all of your videos and thought, not sure my process actually has any edge, right? So I think this has made me look at a process, and I bring this up because you mentioned that you don't predict and you don't think you're any smarter than anyone else, or any smarter than everyone else combined, right? And I've heard you say you don't have an opinion. So can you explain why you don't have an opinion in markets, even though it's been your whole
Because it doesn't
career?
make me money. I often have an opinion. I just don't trade on that opinion. Okay.
Mm,
I'll
okay.
tell you what I think the market's going to do, but there's a pretty good chance that my portfolio doesn't necessarily reflect that. My portfolio reflects only what my process is telling me to do. But you want to ask my opinion? Hey, I'll sit here all day and make a argument about why I think the market's going up or down, and we can have all kinds of fun talking about it, and make all kinds of interesting point and counterpoints, and we can do that all day. But
Mm,
and it's fun. Macroeconomic arguments. I love macroeconomic arguments. I find it to be very fascinating. But it doesn't affect what my positions look like whatsoever. You know,
yeah.
because that is not what has made me money over time. So therefore, I don't do that anymore. Right? What's made me
Mm,
money over time is sticking to my process. So therefore, that's what I want to do, and that's why I say, do you want to be right, or do you want to make money? You have to
mm,
make that choice, and at a certain point in my life, I had to make that choice because I had decided that I was going to trade for my life, and I needed to figure out how to make money. Otherwise, it was going to be very, very difficult. Sorry.
yeah. That's all right.
So, yeah, I think that's what it is. So, yes, I have opinions, just like anybody. I have opinions. I just don't act on them.
Mm, yeah. That's the
Which is
key, I
another great
think.
thing about writing stuff down, and why I wrote stuff down all the time, and all this, because I can put all my opinions on there, and I can go back at the end of the year and I can look at them and be like, hey, did anything I say end up being right?
Right.
And of course, the answer is yes. Some things
Yeah.
were right. And you know what? Some things were wrong, right?
Mm,
Just like anybody else, right?
yeah.
And when we don't write it down and keep that, we have a tendency to remember the things we were right about and forget the things we were wrong about, right?
Mm,
It's
yeah.
fine to do to make yourself feel good, but the market ain't going to forgive you for that, right? The market is going to count the ones that you were wrong about, right? You might not
Yeah.
count it, but the market is going to count it. So, that's the whole thing about opinions. think
Yeah.
one of the guys in the market was said, strong opinions weakly held, was his way of saying it.
That's right. Yeah. Yeah. It reminds me, I had Tom Basso on recently, and he kind of shared a similar sentiment about views, predictions, opinions, that he just has nothing to do with them. And he said, you'll never find a market wizard ever talking about, predictions and opinions, because he said the same thing, that it doesn't make money. And for me, that's where when I mentioned I had a nervous breakdown doing this, getting ready for this interview, it was because my process was full of opinions. It's my opinion, right? I'll give you my view on my process. I was going to wait a while, but I'm going to be selfish and talk about this now, right? But my process is that I trade FX, and I'll go through the market narrative. I think what the market's following, and I look at each country and the data that's come out, and I'll develop a bias on each country, and that will filter down the pairs, the FX pairs, or what if I trade risk currencies, long or short, or whatever. And and when I was doing this research, one of your interviews, you said something like, "Oh, you think you know more than all the other macro analysts out there. They haven't already taken their positions." And then I was thinking, right, might have to change this now.
I mean,
Took me a
I
while,
think
but
that's the point. Price of an asset is the conclusion, the current conclusion of what all the people involved in that asset think right now. That all comes together at price. So that's everybody's thinking. So you have to be able to think better than everybody combined over time in order to win that game. So didn't work for me. Maybe it'll work for you. And again, it's a dangerous thing, because once in a while you will get it right. You will have a winning trade. So all of a sudden you'll convince yourself you are the smartest fucking person out there, right?
Yeah.
And that's becomes a very, very dangerous place to be. It's funny you mentioned the Tom Basso thing. You won't find a single market wizard say this. And yet, as we were talking about before, people still need to learn their own lessons. The truth is, I would say if you just read the first 3 Market Wizards books, which is like Market Wizards, this new Market Wizards, and then the Hedge Fund Market Wizards. If you just read those 3 books, you're talking about reading some secrets of some of the most successful traders that have ever lived. Shouldn't that be enough? Shouldn't that be enough for you to trust? I would think so, but it wasn't for me. I read those books 100 times, and I still had to go through the process of learning for myself, right? But you would think that would be enough. I mean, it's like, anything. You guys don't play baseball over there, but you read some books about how to hit a baseball by, some of the best hitters in baseball. Isn't that something you might want to pay attention to? I would say yes. Or you can just go out and try to learn for yourself and miss the ball a million times and try to figure out, what works for you. And okay, but it's just an interesting comment from Basso, I think, because despite the fact that everybody knows that, why would anybody do anything but that? Read those books, write down all the rules. Jack Schwager's done it for you. He's done a book that summarizes all the rules and all that, right? You just read that book, right? But no, I'm going to learn for myself. So that's what people, for the most part, do.
We'd never have any stories if we all got it right the first time, right? So
just making money right from the start and making money your whole life, that would be boring, wouldn't it?
Yeah.
Give me the boring life.
Yeah, but after I heard you say that, I haven't read any of the books since then. So I'm finishing the Unknown Market Wizards now, and I didn't read any of the Market Wizards books, right? I was just doing it all myself, making all my own expensive mistakes. So I've stopped that now after I heard that interview you gave. And yeah, I'm still trading, but to be honest, the only thing I'm trading that seriously was after I spoke to Tom. He just told me one of his breakout strategies, and I was like, right, well, start listening a little bit, Colm. So I just wrote down some rules, some ATR plus, price action, previous day candle type stuff, and it's working quite well actually. So yeah. So
it's funny. I talked to Peter Brandt one time. I did an interview with him, and I go on my Discord and I ask all these guys, "Hey, I'm speaking to Peter Brandt. If anybody has any questions, let me know, and I'll be happy to ask them." And one of them was like, "Oh, you used to trade like this time frame moving average, and now you say you trade this time frame moving average. What made you change? What was it based on this?" He's like, "Look, it doesn't freaking matter. It doesn't matter how you trade, man. It's all about the discipline of it. It's all about how you take the losses and how you ride the gains and how you stay disciplined to your process." He's like, "You want to know why I changed my moving average? Because I got older and I wanted a longer term moving average because I wanted to trade less. That's why I changed my moving average." So the point is, it's not about finding that magic formula, right? It's about being disciplined and sticking to whatever formula that you're using. It's so much more important. There is no magic formula other than be disciplined, cut losses, ride winners. That's the magic formula. Get into situations where the reward is higher than the risk every time. And that doesn't mean you're not going to have the loss. You are, but take it. And then get into the next situation where the reward is higher than the risk. It loses. Take the loss. Get into the next situation. It loses. Take the loss. Get into the next situation. Boom. You just made back all those losses plus more. That's all this game is about. I can tell you that's all it is. I have losses all the time. I'm not sitting here and I say, "Oh, I had a loss. Oh, well, whatever. It's just another one." I get pissed just like anybody. But the truth is, I take my loss, I move on, and over time, that has worked for me, because then I'll get those booms every once in a while, and it will more than make up for all the losses, and it'll pay for my life. So that's what this game is, and I think that's what people need to understand. They focus so much on finding the perfect moving average, or the perfect breakout measure, or the perfect Fibonacci number, or the perfect whatever it is, and that doesn't exist.
So, I mean, because I know, say, your process is something quite personal to you, specific to how you work or how you think. But for someone that's coming to trading now, trying to find those high risk reward situations, how would you tell them to kind of start, where to look when they're building their own process?
I mean, think about it in these terms. If 95% of traders lose money, then if you're doing what 95% of traders are doing, there's probably a good chance you're going to lose money. So you have to come up with something different. And if you want to make it super simple, if 95% of traders are losing money, then why not just try to figure out what those 95% of traders are doing and go the other way? That's really what my process is based on. That thought is what my process is based on. Now I have to start bringing in some data, and I have to start, making some assumptions and doing this and that. But I think start from that idea, start from that idea. And then read these books. There's plenty of books out there. The Market Wizards books are great, but there's other books that are great too. And start letting it think in what people are saying. It's like everyone says, "Oh, you have to be contrarian." Okay, good. But what does that mean? What does it really mean to be contrarian? Does it mean if this thing went up that I should be shorting it because that's contrarian? I don't think that's contrarian. That's just stupid. There's a fine line between contrarianism and stupidity, right? It's like they say, don't fight the tape. But if you're being contrarian, you are fighting the tape, right? So you have to find that fine line in there for that. So I think those are the important things to think about when trying to build a process. And also know what the goal is of what you're trying to do, trend following has proven over time to offer positive returns. I go against trends. I'm make a counter trend follower in a way, right? And my process has over time proved to work, right? So either one can work, but what's your goal, right? Is your goal to sort of be a trend follower and have that type of return stream in your portfolio, or is your goal something else, right? And that's a hard thing to define, especially when you're starting out. I always reminds me of when I started playing guitar a few years ago. I started taking guitar lessons, And the teachers were like, oh, well, what are your goals? You know, I'm like, what are my goals? I want to be Eddie Van Halen. What do you mean? What are my goals? You know, I want to be a fucking ridiculously ripping guitar player. And so I didn't even understand the question, right? But now, a few years into it, as I've done this and that and the other thing, I'm starting to understand what that question means, right? There's a million things you can do in playing guitar, right? Which way, where are you trying to get to with that? And it's the same thing with trading. And people are gonna be like, well, same thing. What are my goals when it comes to trading? Well, I want to make as much money as I can. Well, obviously, right? But that's not really the answer. That's really not the answer, right? Your trading should be one return stream in your life, not the only return stream in your life, right? So therefore, your trading should offer you some sort of non-correlation, I believe, to your other return streams, right? You have a return stream where part of your portfolio is along the stock market, which it should be, right? Because the stock market has certainly proven over time it goes up. We have population growth, we have inflation growth, we have productivity growth, and those things lead over time to the price of equities going up. So you have that allocation. You probably have other allocation to real estate, maybe own your house, right? Which is usually a very big investment for most people. So, but that's going to probably be correlated, right? The stock market's going to go up over time if there's economic growth. Your house price is probably going to go up over time if there's economic growth. Those are pretty correlated investments. What you want to build wealth over time, which is really the goal of all of it, is to have non-correlated investments. So I believe very strongly your trading account can be should be a non-correlated investment to these other things. And listen, trend following can be that, right? Because if things are going to start going down and they go down a lot, and trend following stuff can get short and you can make money short. I mean, that's why trading can be non-correlated, because you can be long and short, you know, that type of thing. And that will give you a non-correlated return stream to the rest of your financial portfolio, right? It's very hard to find a non-correlated return stream. Most things are going to be correlated to economic growth over time. But trading can definitely be one of those things. And to me, that is the best goal from my point of view. Other people have other points of view, but from my point of view, that's the best goal. Have a positive expectation return with non-correlation return stream to the rest of your life's portfolio.
Yeah. Oh, yeah, I agree. I wouldn't have agreed with you 3 years ago, but I do now.
Well,
Yes.
nobody would. It's boring, man. Some kid right now listening to me.
Yeah.
What is this old man talking about, man? I just want to get rich, you know.
No. But you hear enough people with that message, and eventually it does sink in that this is what it could be the big boys who have hundreds of millions of dollars that are using, say, trend following, or with a fund of funds, they're allocating to trend following, they're allocating to you, and they're getting their diversification that way. But yeah, it's the way to go. On that topic,
I think so, but it's boring to hear. But you know, I mean, people want to hear me come on here and say, okay, here's the secret sauce to becoming, you know, a multimillionaire, right? And in a way, that is the secret sauce to becoming a multimillionaire. Have a bunch of return streams with non-correlation and positive return expectations. That is the secret sauce. But people don't want to hear that. They want to hear when a market, you know, hits its 20-day moving average and there's a divergence versus the 30-day RSI. You know what I mean? That's the one. You know, you take
straight
that.
up. Yeah.
Right. That's what people want to hear. But I'm here to tell you, I don't think it exists. I have studied many things. Had people working for me, full-time quants that are, you know, we run all these things, and I've known other people in the dozens, traders that have done many things, and I can tell you that secret sauce does not exist, at least to me.
Yeah, you have a contrarian approach, a process, and that people allocate money to you to complement other processes and strategies they allocate money to. But obviously, you've been a trader for so long in the markets, right? If I was to give you, if I removed that restriction on only you could trade this process, gave you $1 billion to allocate, to come up with your own strategies, as a kind of all-weather, make as much money as you can, 30% risk target, which strategies would you allocate money to, and why?
I wouldn't allocate money to one strategy. I'd allocate money to a bunch of different strategies.
Yeah.
I'd probably put somewhere between 30 and 40% into my strategy, because that has always been where the efficient frontier is maximized, somewhere between 30 and 40% against other return streams. And then I'd put money into some kind of trend following strategy or momentum strategy,
Mhm.
and I'd probably put 30% of it just into a long stock strategy. 30% into the long stock market, 30% into my strategy, 33% into a trend following strategy. I think that would probably get you pretty close.
Nice. Buy and hold stocks, is it?
Yeah, I mean, that should be the core of anything, truthfully. Even our friend Jim Cramer, who everybody likes to rip into, he says that, he's like, look, what I'm talking about here is trading and all that, and you can do it, but not until you have put money away into your, into your index fund. Get money into your index fund, and now use trading as an enhancer. And nobody wants to hear that, but it's a damn straight truth, man. I wish I had done that as a younger person. I would have a hell of a lot more money now if I just been putting money away into index funds, for the last 40 years or whatever, right? But I didn't, because I was smarter than that. I was going to kick the crap out of the market all the time. I didn't need to do that, right? But in retrospect, would have been better off.
Yeah. Yeah, I don't know if you'd be better off or not, but it's a solid strategy like any other one, the dollar cost average and index. And
that's right.
And again,
it's hard to say that here. It's always hard to say that, but it's hard to say that here. Market's on all-time highs. You know what I mean? It's a bubble, and Nvidia, this and that. You know what I mean? But know that, and I was working at a pretty big hedge fund when the market crashed in 2008, and I knew some people there. One in particular that I can think of who caught that crash and made a bunch of money. And he had lost it all within the next 4 or 5 years. He gave it all back, right? You would have made more money instead of trying to short in 2008. You would have made more money had you been just dollar cost averaging the whole way down after 2008 by now, right? Okay, in 2008, you would have been a hero being short, right? But I'm telling you would have made more money if you just used that and dollar cost average the whole way down. Because look where we are now. You would have been buying the S&P way bad down there, And that has, at least to this point in history, that's been the case. And does it mean it always has to be the case? No. Does it mean you don't have to have discipline to do it? You do have to have discipline to do it. There's been plenty of times where the market's gone 15, 18 years without doing anything, right? But if you had been dollar cost averaging that whole time, you're pretty glad you did. That year might not be great. The next year might not be great. 10 years might not be great. But go out enough, 20, 25 years, and it's worked real well. I tell my son all the time, like, he started working a few years ago, and he's got a 401k or whatever the hell they call it, a retirement account. I'm like, dude, you should be putting money into the market every month and hoping that it goes down every month. You're in your 20s. You should want this market to go down every month. And you can just keep buying it cheaper the whole way. And you should want it to go down for the next 20 years. And you can just keep buying it cheaper for the next 20 years. And then when you turn 40, between the ages of 40 and 65, then it can go up, and then you can make money, and then you can take that money out and retire from, right? That's what you should be hoping for. But people have a hard time understanding that. Why would I want the market to go down if I'm putting my money in it? Why wouldn't I just wait until it went down and then put my money into it? It's like, well, because you don't know.
Yeah. That's it. You don't know, because it seems like a simple question, but there's so much complexity to the answer. It's like almost impossible,
That's right.
That you mentioned earlier, reading the tape in your trading. And I heard you say that the the tape knows more than anyone. So what is reading the tape for people that don't know, and how do you use it in your process?
So to me, everyone has their own kind of definition of what that means, but the simple definition is just because you're bearish, if the market's going up, then you know what I mean? Then stop being bearish. The tape is telling you you're wrong, right? The market's going up. That's one example. To me, a little bit deeper of how to read the tape is how is it reacting to different inputs, right? They say a bull market should react very well to positive inputs and should fight off, for the most part, negative inputs, right? That's a bull market. And a bear market is doing the opposite, right? A bear market is going down a lot on negative inputs, and it's not really going up very much on positive inputs. To me, that's what reading the tape is. And you have to know what those inputs are. Obviously, like you have to pay attention. What's been driving the market, right? What's sort of the psychology behind what's driving the market, right? We know, for example, the current stock market was for a few years there being mostly driven by inflation. So how did the market react to inflation numbers that were higher than expected? And how did the market react to inflation numbers that were lower than expected? And that helps you define what the tape is telling you. I believe that we've kind of moved on from there now, and we're really reacting more to sort of employment type of information now. So, okay, that might be right, it might be wrong, but let's just say that seems to be the mantra out there. So then let's pay very close attention to these employment numbers and see how the market reacts to them, right? It doesn't tell you anything if the number comes out bullish and the market goes up. What did that tell you? That's what it should have done. Number comes up bearish, the market goes down. Okay, what does that tell you? Unless you have that number before everybody else, that ain't going to help you at all, right? And you're not going to have that number before everybody else because that's insider trading and it's illegal. So that's not going to get you very far either. So what is the tape telling you? How is it reacting to these inputs? I think is a very important thing to get used to. And it's not to say it can't change. It changes. Today, hey, there was bad news and the market went up anyway. Oh, the tape is great. And then the next day, oh, well, here was good news and the market went down. Well, what does that tell you? Now the tape is telling you both things, right? Well, maybe what it's telling you there is we're in a range-bound market. And it's really not the time to be fooling around, right? There's that too, right? And then within all of that, of course, is the fact that a lot of it's just random anyway. So how do you read a random tape, right? And most days are random. So just know that and look for the ones that are important, right? I think that's the important thing to do. I think the example I give a lot was the low of the stock market in 22, right? The markets were getting crushed in 22 because the inflation was coming out higher than expected, and the Fed was going to have to raise rates, and nobody knew how they were going to get a hold of this whole thing. And then one day in October, we had a CPI number coming out, which was what everybody was focusing on then, and it came out much higher than expected, and it was the biggest CPI of the entire year. And the stock market went down because of that, which it should do, and then it closed up on the day, on the biggest CPI number of the year when everybody was freaking out about CPI. There's a day that means something to me, right? That's a tape that means something to me. It's telling you something there. And as it turned out, that was actually the exact low of the stock market that day. We haven't seen those lows since, and we're obviously way off of those. So that's what reading the tape is to me. How is it reacting to these things?
Yeah, it's such an important point. And I think it was a big thing. I was underweighting and then realized I was underweighting before this, coming up to this interview. But it's the difference between having a view and, being aligned to the market. I think it's like, maybe you were right that CPI, was negative. That was your view. But if you got short and the market was telling you it was going up, then you were just wrong, right? Because I think you were, as you say, fighting the tape, right?
I see these macro analysts say that all the time, oh, we've got pretty much everything right that we have said except the market. Okay.
Yeah.
fuck does that tell me? You know what
This
I
is
mean?
me now.
I'd rather get everything wrong except the market. Getting the market right is the only thing that matters in this game, right?
Mm,
You're not
yeah.
trading futures contracts on CPI. You're not trading futures contracts on GDP, right? You're trading futures contracts on the S&P or whatever it is, right? So this thing of, oh, we got everything right except the market. Okay, great. So the only thing that mattered, you didn't get right. So what are you even talking about, right? But it goes back to that whole idea. People are looking to be right. And you have to make that choice. Do you want to be right? Do you want to make money? Market doesn't have to go down just because there's a recession. It doesn't have to go down because of that, right? And it doesn't have to go up just because there's an economic boom. It depends what's discounted in, and the market will tell you where it's going if you pay attention and watch the tape.
Yeah. It makes so much sense when we're just talking about it out loud, that big need to be right. The answer is found in consensus, and consensus tends to be wrong and lose money. It's kind of like that. Feels like a perpetual cycle a little bit.
I hope so. I hope it is, because that's what I bet my life on. So,
well, before we jump on to psychology and risk management, the Market Wizards book did come up. Books did come up, plural, and I wanted to know who is your favorite market wizard and why.
I think, well, it's been a while since I've read the books, but in the first book, the first few chapters, the people that came out of Commodities Corporation and all that, Kovner and Tudor and those guys, I think they were my favorite.
Right.
Probably because it was biased towards how I thought, you know what I mean? But I think they were my favorite. They talk a lot about the need to be contrarian. They talk about a lot about the need to let the market, all these things that I was just talking about. I didn't make any of this shit up. You know what I mean? This is all, I don't want to use the word stolen, but learned from these people, right? I think that those were my favorite people. And if you look at it, those are the ones that had continued, that a bunch of them had continued success, but those are the ones that really had continued massive success. Kupner, Tudor, and all these guys. In Hedge Fund Market Wizards, I always thought the Michael Platt interview was really good. And if you look at what Michael Platt has done, he's ridiculous. His numbers and his returns and his return to risk and all that are ridiculous, right? So that alone should be reason, right, to want to read that, right? But on top of that, I thought that his interview was really good. He gave some really good information. I thought he gave some really good psychology stuff, and I really enjoyed that one too. So I would say those are my favorite. The Kovner one, for whatever reason, and I was able to meet Kovner at one point and sit with him for a while, and yeah, that one always had a big effect on me.
Oh, very good. Yeah, I think if people would have the humility to realize that these guys have been ultra successful before, they may have found as close to the secret to success as you'll ever find, and it's in
And
a
listen,
book.
they didn't make this stuff up either.
Yeah, true.
It's almost like there is kind of a rule book, you know, and those rules are in those books, right? So those are where you want to go. You know, to me, that's as close to a rule book when it comes to this stuff as you're going to get, I believe. So you might as well at least learn those rules, and then if you want to break them, then hey, at least you know what rules you're breaking.
Yeah. Well, I've heard you talk about, Mark, how much psychology plays a part in your trading, but I never really found out, what exactly is psychological in terms of your trading.
Like I say, I'm looking to, as we like to say, fade, don't trade, right? Which means basically just find the guys that are about to lose and take the opposite side of their trade rather than thinking and trading and thinking I'm smart, right? Let's just find the dumb guy and and not the dumb guy, but the guy who has a tendency to lose money, and let's go the other way. And I can recognize that tendency to lose money, quite frankly, because I was that guy. So, because like I say, we're all pretty close to the same, whether you want to believe it or not. I know we all want to feel special, right? But at the end of the day, we're in a pretty small band, right? We're all pretty similar at the end of the day. We're all susceptible to the whole fear, greed thing. We're all looking for love. We're all looking for acceptance. We're all pretty much human beings. So I can recognize in others a lot of times the mistakes that I have made in the past that have lost me money. So if I'm like, oh, when I thought like that, that always lost me money. And here's a guy that's thinking like that. So it's probably going to lose him money. So why don't I just take the other side? Why don't I just make a market to him? If he has a high probability of losing, then me taking the other side should have a high probability of winning. That's the psychology that I use.
Right. How do you find these people? Are there places you look for?
Well, I mean, the first thing is I'm tracking mass positioning. I'm looking at the commitment to traders report. So I'm looking at positioning to begin with, which is just data. But on top of that, I'm listening, I'm reading, I'm listening to a lot of people. I'm listening to, the people on financial news and all that and what they're saying. And I'm listening to a bunch of different, interviews or people that do these daily blogs or whatever, and I'm just listening to a lot of that. And when one person says it, that has a history of losing and whose thought process has a history of losing, that's one thing. When all of a sudden a whole bunch of them are saying it, they all kind of have a thought process that has a history of losing, I think it increases the odds of going the other way, of being successful. So I sit here all day and I read stuff and I listen to stuff and I try to develop where that mass consensus is. And then once there is a mass consensus, I'm looking for where the market is telling them they're wrong, and yet they are not listening. And I'm going with the market and against the mass consensus.
Right.
Because mass consensus can be right for a while. You don't just want to step in the way just to be a jerk, right? You want to step in the way when the market is telling you, okay, these guys are now wrong, right? Here you go. They were right that the CPI was going to be higher, but the market's up on that, not down, right? So the market's telling you that they're going to stay short because the CPI was higher, despite the fact that the market's not going down anymore on that, right? So I'm going with the market and against the mass consensus.
Okay. Very good. So you're obviously keeping track of everything that's going on, and what I mentioned before, the market narrative and, people's bullish or bearish view on yields or whatever, plus the commitment of traders report to get a kind of double, I guess, a confirmation on consensus. And then you wait for them to almost, the tape to go against them.
That's correct.
Well, that makes sense in terms of the psychology part of your process, because I guess that's all grounded very much in, psychology and consensus, right?
That's what it is.
Yeah. Yep. On that same topic, I read that during your career you took a month out to go to a Burmese monastery, right? How did that impact your view on trading psychology, or just broader your own psychology?
Yeah, I didn't take a month out of my career. I was working in Hong Kong and I was going to start a master's degree program in London. And
Okay.
I took 4 months and decided that I was going to try and get from Hong Kong to London over land. And in that process of going from Hong Kong to London over land, I ended up in Burma. And I was visiting a monastery and I ended up staying there for about a month. So that's how that kind of happened. How did it affect my trading? I would say on a long-term basis, it affected my outlook, my psychology of life and what's important and all that stuff. It isn't like the next day I walked out of there and I was like Buddha, and all of my trading just flowed, all of a sudden, it wasn't like that, but it's one piece of a puzzle of growing and I guess, to use a horrible word, maturing in a way, and focusing, at least for me, on what is important, and what is not, and that can help you with trading as well. Trading is always going to be a chase for money, right? But you really have to take the money side out of it, and then they'll tell you this in all the psychology books, right? You have to take the money side out of it and focus on the process. That's what they'll tell you in all the psychology books, right? Focus on the process, not the money. If the process works and you focus on it and you're disciplined to it, the money will come, right? And so that's sort of, in a way, outside of the money part, sort of a very Buddhist type of outlook, Don't focus on this end goal that everybody's looking for, right? Focus on now, focus on today, focus on this breath, right? That's what's important right now, this breath. And after this breath, the next breath, right? So it's a very similar type of thought process, I think.
Right. And did you start developing your process that you still use now after that point, or was it already
I did. It was
thought in
probably
your
a
mind?
couple of years after that, yeah.
Right.
But it
Yeah.
was all part of the slow, development, I would say. It was all pieces of a slow development from point A to point B.
Yeah. You've had kind of an unconventional little bit as far as traders' journeys can go, unconventional. Do you think everyone needs to go through their own kind of unconventional path to trading, or you think people
I think
people
everybody needs to
exist
go
that?
through their own path, be that conventional or unconventional. I didn't really have much of a choice. I didn't come out of Harvard. Wall Street wasn't knocking on my door.
Right.
I had to fight my way in. So therefore, it was somewhat unconventional. I have worked with people who did go to whatever, Harvard or Wharton or whatever, and they walked right into a hedge fund and they started going, right? Which is a little bit more conventional, right? So you have to go through your own path. That's really, at the end of the day, the only thing that works is you have to do your path, because that's the only path that's going to work for you.
Yeah. So you mentioned the commitment to trader support is a big thing. I think it's what a lot of people know you for. I've tried to start bringing it into my process when I had a panic that I had no edge in my process and it was all my opinions and stuff. So how do you know when crowded is too crowded when you're watching
You
trades?
don't. You never know. You can only play the odds, right? So, I take the commitments to traders report and I index it to history. It's just like taking how do you know what RSI is oversold or overbought, right? Is it the 30-day RSI that you want to know? Is it the 90-day RSI? Is it the 180-day RSI? Is it the 250-day RSI? How do you know what moving average is the best one to use? Is it the 20-day, the 50-day, the 150-day, the 200, right? And it's the same thing. How do you know what crowdedness is crowded enough? So I index it and I pick a number, this length of time over the last 6 months. This is the most crowded that this market has been. And based on both back testing and live testing, that 6-month area has been a very good area. So it is now saying that it's maximum crowded in that time period. So that's when I'm going to act. And I don't just act based on that, because I waiting for the market to confirm it anyway. So, that index level might be the wrong one, but unless the market starts to confirm that I should have the trade on, I'm not going to put the trade on anyway. I wouldn't just put a trade on just because of crowdedness. I need the market to confirm. And I would say that this is valid for any kind of process that you're using. No matter what the process is, the market should confirm what you're doing first. And that's kind of like going back to what reading the tape is all about.
Yeah. Very good. So, I think that's the element of being aligned to the market in that process? Because I guess these crowds can, or trade can get very crowded for a long time, right?
They
So you
can, and they
must
can
have.
always get more. They can always get more crowded too, right?
Hmm.
But
Yeah,
the
I
idea
heard
is not
you.
that. Again, the idea is not that every trade's going to work. The idea is that a trade that works is going to make you $10, and a trade that doesn't work is going to lose you $1. That's more important.
Yeah, yeah,
And that's
I
what
heard
sort of
that.
getting into crowded trades can help to do.
Yeah. Um, I heard that you had a 3-month period where you didn't take a trade this year. So I guess that was a stage where crowded trades were just getting more crowded and there was nothing came to your process. But what was it like to have to sit on your hands for 3 months?
Difficult, and it's the first time it ever happened. But it wasn't that crowded trades were getting more crowded. It was there was nothing that was crowded.
Okay.
Um, so therefore, there was nothing to do. And as I now can, again, this goes back to me writing down every week what I'm thinking and what I'm doing and what I'm looking at. When I go back and look at that period now, trend following was killing it in the first part of this year. And so, as someone who's going against trends, theoretically, I didn't have to go against any trends. So, trend follow killed it. I didn't lose any money, right? And then when trend following got crushed, the last few months, trades were coming up and I was able to catch those. So if I can make money when trend following is getting killed and I can not lose any money when trend following is making it, then I'm doing my job very well, right? Doesn't always work out that way. Usually if trend following is going to kill it, I'll lose a little bit of money. And then when trend following loses, I'll make more than they lose. That's usually how it works out over time. In this particular case, it was as difficult as it was at the time. When I now look back, it was genius. The process was genius for that period of time, not having any trades on,
Yeah.
So, and I think that's another way that looking at crowded markets can help, by the way. What about when they're not crowded? What's the signal there? Would you rather be in a market that's trending higher that nobody's involved in, or a market that's trending higher that everybody's involved in? Right? I would argue that you'd rather be in a market that's trending higher that nobody's involved in, right? That's what can get the market to continue to trend that way. And that's exactly what happened earlier in the year. Nothing was crowded and stuff just kept trending
It sounds like the
until it got crowded
ultimate.
and then it turned.
Yeah. Yeah. And I want to ask about that turn, but it sounds like the ultimate pair, when I listen to you speak about, yeah, obviously catching turns, but and making, say, being flat, ideally when trend following was killing it. If you can follow trends and then, maybe lose some money and then catch a turn and then follow trends when it's uncrowded, it sounds like the perfect combination. Am I missing something there?
That's the idea. I don't know if
Yeah.
it's perfect. I can assure you it's not perfect. Okay. But
Mm.
over
Yeah.
time, it tends to be a very good combination of stuff. Yes.
Yeah. Nice. And when you say there was a time this year when trend following was getting crushed or having tough performance, do you mean this yen carry blow up, or was that what you were
It
referring
started
to?
even before that. Truthfully, it really started more like in June, July, August have been some pretty tough months for trend following.
Right.
And that was right when I started to fortunately see that things were getting crowded. And I was able to catch a couple, and I missed a couple as well. But I don't need to catch all of them. I caught a few, and that's really all it takes, right? So I caught a few nice trades on the counter trend stuff, on the crowding stuff, and I had a good run, and that was always enjoyable, obviously.
Can you give an example of one of the trades you caught this year?
So long Swiss franc was one that we caught. Started buying it like in May. Kind of caught
Nice.
that turn. Long the Canadian dollar was one that we were buying in mid-April, which actually got us stopped in August, but then we're able to re-enter it because it was still crowded. In fact, even more crowded come August time. So
Hmm.
caught that one. A big one was copper. It was probably I want to say my best trade of the year. I'm not 100% sure, but probably
Oh, well.
was. Back in May, copper got super crowded long, and the psychology behind it and the bullishness was just out of control. So we caught that short from sort of mid-May up until, I don't know, at some point late July kind of thing, where it got neutral and I got out. I was just reading today, funny enough, that Goldman has gotten off of their bullish copper idea today. Well, we're like 30% lower. They're getting off now, right? So, those are really some of the bigger trades. It only takes me about 4 or 5 trades a year to produce the returns that I'm looking to produce. So,
What's your kind of risk target for the year when you're trading?
I'm looking to not draw down more than 5% off my peaks ever, using daily returns. And doing that, I hope to put up somewhere between 12 and 18% a year.
Nice. Very good. And do you think it's I mean, you've said this has been your process for over 20 years, right? Do you think it's because it's so grounded in human emotion and human behavior and psychology? Do you think that's why the edge has never really eroded?
Yes,
Yeah.
I do. Yes, people have a tendency to flock. And until that goes away, there's always going to be some form of crowdedness. And if my thesis that the market is driven by money flows is correct, well, then when things get super crowded one way, good chance the money flow is going to start going the other way, and you can have a big move the other way. As long as that's valid, this should work. But on top of that, not only does that have to be valid, I have to be valid. I have to be sane. I have to be on the game. I have to watch my own psychology. I have to watch my own proneness to making mistakes, my own weaknesses towards fear and greed. And I have to be disciplined. So it's a combination of those things, right? I could hand, I can tell you this process to the exact thing that I do to 20 different people, and I bet there would be 20 different return streams.
Yeah. Yeah.
Which is why people get into, oh, well, now you have this web page and you're giving away what you do. Don't you think it's going to hurt you? And why would you do that? And all that. And I'm like, I just don't think that's how it works, because it's like the guy said, it's not about what moving average you use. It's about this, right? And so it's about your discipline. And most people don't have the ability to be that disciplined to do stuff. And the proof's in the pudding. I mean, we've had this thing going for like 3 or 4 years now, and the last 3 years I've had some of my best 3-year returns. So clearly giving it away, so to speak, has not really hurt anything. And if it did, well, then I would probably back off. But not really, because I'm approaching retirement age anyway. So part of what I'm doing is I'm trying to pass this knowledge along. My children, I don't have anybody to take my firm over or anything like that, so it's dying with me. So I feel like I'm sort of passing this knowledge along in some way, shape, or form. I don't know if anybody's hearing it. I think some people are. I hope some people are. But I'm trying to pass it along, as they say. Pay it forward, is that what they say?
That's right. Well, if you're really stuck for someone to take your firm and you really want to hand it over, I'm happy to take it off your hands and you can teach me the process and we'll go from there.
I mean, it's something I've talked to some people about. It's a little trickier than that because the clients, have hired me. Kind of, it would be I would have to train the person, and slowly we'd have to integrate it and let them. It would have to be a whole thing like that. I've talked to some people about it, but I don't know. Why not? Why not just learn what I'm doing since I'm teaching you anyway, and then go do your own firm?
Yeah.
Much more organic way to do it.
Yeah, and I think we touched on it when we talked about the kind of market reaction function. But when I came across you and I guess what you teach just on YouTube, I haven't subscribed to your report yet, but it definitely kind of took me from a purely macro researchy kind of view into right, okay, what's everyone else doing and how crowded are we? So I think it can really bring a lot to anyone's process, actually, what you do, because it's there in all of them, because there's people trading all of them. And so this element is there, and especially if you think you're smart, I think it's a great place to realize you're not that smart. Is go and subscribe to your report. That's what happened to me, right? And I'm now redefining my process to try
That's
and
good. I mean, that's really what I'm trying to get people to do. Right there. Right. Really
yeah,
look deep into what it is you're doing. Does it make sense? And listen, if it's working, then it makes sense, right? Again, to go back to the guitar thing, one of my guitar teachers used to say to me all the time, if it sounds good, it is good. I'd be like, oh, this doesn't really fit into the music theory. He's like, well, does it sound good? Yes. Okay. Well, then it is good. If it sounds good, it is good. Same thing with trading. If you're making money, it's working. Simple as that, right? But if you're not, then maybe you need to start looking into why and looking into different things. And I think that's sort of where I try to help people change your mindset a little bit, right? Here's a little bit of a different mindset that can probably help you.
Yeah, definitely. One last question I had, because I have a mentor that's a big FX guy and was shorting cross yen into this yen carry blow up for quite a while, right? And I want to know if that yen overcrowdedness was on your radar at any point this year, and how you approach that.
I missed what you said there. What was on my radar?
So this yen carry blow
Oh
up
yeah.
that happened, right?
Yeah, no,
That was
listen, the commitments of traders got max crowded right before that happened.
really.
Yes.
Wow.
And I'll tell you this. When I used to raise money, I used to get questions from asset allocators of like, oh, well, how does this commitment of traders work in currencies? Because futures are such a small part of currency trading that, I can't see how that would work. And I guess that could make some logical sense if you want. But the truth is, currencies have been some of the best markets for the commitments of trader stuff. The COT has never missed a currency intervention, not one, including this one. The market has never been anywhere but max crowded when there was a currency intervention. And I mean, the biggest trade I think I've ever had, at least in terms of managing outside money, was in 2015. When the Swiss decided that they were going to depeg from the euro.
Big yeah.
And that blew quite a few people out because people were so massively short Swiss then, which was the only reason why I got long. And it caused a massive move the other way that blew a bunch of people out. And PS, within a few months, the Swiss went right back to where it came from. So the fundamental that the Swiss bank was going to depeg from the euro actually ended up meaning absolutely nothing, right? It did nothing. But it did do something for about 2 weeks there, which was it got everybody who was short squeezed, right? So the COT caught that. The COT caught the yen trade on this one too. It's never missed a currency intervention. Now, that's not to say that it hasn't had losing trades, on the currencies. Of course it has, right? There have been times when it's been crowded and whatever, and the trend kept going. Yes. But again, small loss when that happens, big gain when the other stuff happens. So, so yes, it did. It was really good with the yen thing. And by the way, even if you don't want to trade counter trend using COT and all that shit, if you're a trend follower and you're seeing that there's this massive crowdedness in one of these trends, it's probably beneficial to, at the very least, maybe reduce your position. You could have reduced that yen position ahead of that, right? I'm not saying you had to buy it and try to catch it the other way, because that's what I do, but you could have said to yourself, hey man, this thing's massively crowded here. That changes the risk reward scenario, right? I don't think it's pushing it to say that a crowded trade versus a non-crowded trade has different risk reward, right? So if you believe that, then following when things get massively crowded can be very beneficial no matter how you trade.
Yeah. Yeah, and I can't echo enough that to really just follow, to at least look at this and follow what you're saying, because if you're someone like me who thought they were quite smart and think they know it all, well, you can checkpoint against how many other people also know this stuff. And then if you're a trend follower, how far along we are in the cycle, how far along you may have left. And then if you want to be a turn point person, then it's there too, right? But it's a great benchmark of where are we actually right now, not where you think your view is, or it's something that people don't know. It's like, well, where is everyone? And I think that positioning element is so powerful for every strategy now.
What is the discounting mechanism in the market, right? We know that the market is a discounting mechanism. What is the mechanism? Is it price? Some would argue that it's price. I would argue that it's positioning, right? When is something over discounted? When something has doubled in price? Now the good news is over discounting? Well, I don't think so. People tried to do that with NVIDIA this year. The thing doubled, they all tried to short it. It doubled again, they all tried to short it. It doubled again, right? That's believing that price is the discounting mechanism. I believe positioning is a discounting mechanism. So when it's over positioned, that's when the risk has changed, not the price, but the positioning. So that's what this stuff can help you do. If you believe in that theory, or if you're open to the idea that that theory might be right, then positioning can be very, very helpful.
Yeah. Can you let people know where they can find you?
Yeah, I mean, we have this webpage, crowdedmarketreport.com. That'd be the first place to go, because from there, it'll point you to our YouTube page, which is also Crowded Market Report, I think, which has a whole bunch of videos that I've done. I try to do a video a week. And I can tell you that the vast majority of these videos are not, hey, this is Jason Shapiro, Market Wizard, telling you that the S&P is about to go up this week. It's not what it's about, right? I will sometimes reference things going on in the market just to highlight a thought process. But the videos are really more about thought process, psychology, thought process, and things like that. And then I'm on Twitter too, which is like, I don't know the exact handle, crowded _ something, MKT _ RPT, I believe. So I'm on Twitter. We put some stuff on Twitter. I do things on YouTube. And then we have this full service thing, which is on crowdedmarketreport.com. And then we have a Substack too. If you go on Substack, which is free, which gives you maybe little pieces of our weekly thing to see if you like it. Give you a little free kind of trial type of thing, or see if it's worth it to you, if you like it, or if you think it's full of shit.
Well, I'll find all of those links and make sure I link them in the video. But thank you so much. It's been a real privilege to spend this much time with you. And I just, again, will echo that. Yeah, you changed my process, and I think you change almost anyone's if they just have a listen to you. So, so thank you again.
All right, man. Cool.